Let's get back to Nigeria, where the headlines of current earnings season, banks are delivering record quarterly gross earnings and net profit. The UBA Group, one of the top lenders with strong Pan-African footprints, announced a record 115% earnings growth. Net profit climbed 263%. Operating income rose 146% during the period, hitting more than ₦1 trillion for the first time ever. Joining me now to read the tea leaves of the latest earnings by UBA is Sir Johnson Chukwu, is the Group CEO at Cowrie Asset Management. A good evening to you. Thanks for connecting into the show tonight. We appreciate it. Let me take you straight to the market straight. Catch Me If You Can. That's the song. You remember that. You're smiling because there's been more than $1 trillion, 1.5 trillion in market gains since we started this week. So it's a smiling time for those of you who are investors and market institutions. So these earnings from the big banks, what does it look like for you, especially from big names such as UBA?
Well, what I would say is that both in, like you said, catch me if you can, the market is largely been driven in the past couple of days by the publication of what you may call mouth-watering performance by the major banks. You just made reference to the UBA performance, over 150% increase in turnover. Total turnover about 1.3 trillion naira, and a profit before tax of more than 500 billion naira. And the profit earnings per share of more than 12 naira. What you call earnings PE ratio, price earning ratio, of in the region of 1.57 times, and then earnings yield of more than 60%, about 64%. Those are exceptional performances, and that kind of performance is also similar to what we saw in the Zenith case. Zenith also had a turnover of more than increasing of more than 100%. I think about 114% increase in turnover, and a turnover of more than 1 trillion naira, and a profit before tax of more than 500 billion. So this kind of outstanding performance in terms of revenue, in terms of profitability, is what is driving the market.
Interesting, but walk me through the third quarter numbers from UBA Group. Let's see, what are the major line items for you in those financials and why?
Top line, you look at interest income. Interest income grew by more than 50%. That, for me, is a major parameter to measure whether the economy is growing. And then if you go down further, you look at other major areas of growth where, in terms of revaluation income, exchange rate-oriented income, we saw more than 1,600% growth in fair value of derivatives, and we also saw a major growth in revaluation income. So the fair value from derivatives grew to about over 300 billion naira. So these are factors that you can say, well, in the first place, of course, we know where that is coming from. But like I said earlier, I looked at the top line, I looked at the core business of the bank, and which is that of intermediation, or what we call lending. And we saw an increase of more than 50%. But beyond that, we're also seeing a very strong performance in non-interest income, beyond the revaluation income. You're also seeing a strong performance in non-interest income. And this is to say that the bank is getting a lot of customer patronage, because when you see an increase in non-interest income, it simply means a lot of customers are using the bank's services in their financial service engagement.
If you look at the statement, how much impact do you think the Pan-African operations of UBA have on its current earnings? The group CEO says in a statement that was released alongside the earnings yesterday that this reflects the strong performance of UBA beyond the Nigerian market. He says this significant improvement is attributed to the impact of FX harmonization. We'll talk about that. But they also said that banking operations outside of Nigeria have continued to capture the broader business opportunities interest inherent across and beyond sub-Saharan Africa. That's according to Oliver Alawuba.
Yes, Boston, what I would say to that is that, one is that because, like he did make reference to the harmonization exchange rate, created a huge leap in their earnings. Of course, that means that is what we may call a risk in the sense that it's peculiar to the Nigerian environment. And the fact that they also have strong income from their operations outside the country will mean that even when such windfall, as you may call it, does not occur in Nigeria, that they will still maintain some level of stability in their earnings. And I think that's basically what we have to bear in mind. The fact that they have operations in several African countries, they have operations in US, and those are to show that gradually they are diversifying, they have continued to diversify their earnings and minimize their sovereign risk exposure to only one country, that's in Nigeria. But give and take, the Nigerian economy still remains the biggest in Africa, and will beyond the fact that we have a devaluation that IMF or World Bank say that South Africa could possibly overtake us. But now we still remain the biggest economy in Africa. So the larger chunk of their income is still coming from Nigeria. The FX related income may not repeat itself next year unless the currency continues to devalue. But the fact that they have income coming from other countries will give them some level of stability in terms of their earnings and in terms of their profitability.
Yes, so to sum it up with you, what's your full year 2023 outlook on UBA? What's the price target from your end? At carry asset, what's the expected dividend when the year ends? And we're looking at the full year sometime early in 2024.
Well, let me start from my expected price at the end of the year. I may not be able to be specific on price, but if you look at the earnings ratio, and you look at price earnings ratio, I say that price earnings ratio is in the region of 1.57, which means it will take the company about less than 2 years, 1.5 years, to generate enough earnings to pay you back your payback period if you buy the shares at about 20 naira or 20 naira 30 kobo. Today, I think it closed at about 21 naira. And if you look at the price to market ratio, then you are looking at in the region of 64%, which means the market price at about 20.3%. When you divide that by the earnings of about 12.9%, 12.9 naira, you get an indication of about 64%. So, I mean, if you divide the earnings by the market price, so which is the price earnings ratio. So the fact is this: at such levels, it then means that the stock price of UBA should continue on the upward trajectory. Like I said, today it closed about 21 naira. And because a multiple of less than 2 is exceptional anywhere in the world, and that will imply that inherent in the stock is a lot of value that have to be fully taken advantage of. So I think on that basis, one should expect that stock prices will get further than where it is today. But beyond that, in terms of earnings, further full year earnings, we're already looking at a PBT of more than 500 billion. I don't think that current rate may be used as a round rate. Because if you say a round rate of 500 billion after the first 3 quarters, it then means you are talking about the region of 1.75 billion. Additional, maybe they're saying that the company could close a PBT of close to 700 billion. That might be a tall order. But I think at the minimum, we should expect a PBT above 550 to 600 billion at the end of this financial year.
All right, well, thank you for those analyst insights on this as always. Thank you so much. Have a pleasant evening. Johnson Chukwu, market professional and group CEO at Carry Asset Management. Thank you. Have a great evening.